Wall Street's main indexes ended mixed on Tuesday, with the Dow dropping more than 0.6%, the S&P 500 gaining over 0.7%, and the Nasdaq climbing 1.6%. Softer than expected inflation numbers added to investor optimism that carried over from Monday's announcement of a U.S.-China trade truce. The S&P 500 is now back in positive territory for 2025 for the first time since late February. Stocks nosedived after President Donald Trump unveiled global reciprocal tariffs on April 2nd. Brian Mulberry is client portfolio manager at Zacks Investment Management.
We've had this wall of worry from April 2nd and kind of coming back from that. I think really what has driven markets to this point is all of the worst case scenarios, the worst outcomes have kind of been taken off the table. That doesn't mean there aren't some tough answers out there ahead of us. There certainly are, but I think the really bad stuff has started to turn at least more neutral to positive at this moment in time. That's helping to fuel, I think, a better level of confidence in markets right now.
The Dow, however, was pulled down by a nearly 18% slide in shares of United Health Group after the insurance bellwether suspended its annual forecast and its CEO stepped down. Among other movers, shares of crypto exchange operator Coinbase Global surged almost 24% after an announcement that it is slated to join the S&P 500 on May 19th. And shares of American Eagle Outfitters, up more than 5% at the close, crashed 18% in extended trading after the apparel company withdrew its annual forecasts and took a $75 million inventory charge on its spring and summer collection due to economic uncertainty fueled by tariffs.